Hi guys, Jeff here. Time for the next Wyckoff episode. Today we are talking about accumulation, what it is, and how to kind of see what it is doing as it develops. That way you can have a basis on what exactly is going on. So first and foremost, I mentioned in the last video that this was an accumulation. And then we weren't going to be sure quite yet what this is. And to be honest, it's not really a great formation. Like, at its core, it certainly looks like a reaccumulation. Price came up, and then it came up again. The problem is it never broke this level here with any confidence, which leads me to believe this is just kind of some garbage in between real Wyckoff patterns. Not every pattern is going to line up perfectly. Which brings me to my very first point on this video. Now, a lot of you have seen this, more than likely seen this this schematic bouncing around all over the place. Accumulation schematic 1. This is the most popular one you'll see out there. Now, you can Google a bunch of different schematics. There's, I don't know, I think there's about 6 of them out there for accumulation, where it shows these guys in different forms and different, and that is all kind of made after the fact. That's not really the key concepts that Richard Wyckoff himself was looking at. He was more looking at, well, I'll tell you in a little bit what he was looking at. But before I do that, so I've taken apart some of the chart here so that you can kind of keep an eye out for what to look for. I don't particularly care for when YouTubers go, okay, well, here's your PS, here's your SC, and then here's your AR. So what we're going to do from here is we're going to come up again, and then we're going to do this, and then we're going to do a support test here, and then we're going to, do kind of like this thing, and then we're going to have our spring here, and then we're going to have our SOS, and then we're going to pump. Like, this is just someone taking this chart here, or something like it, and then copying and pasting it on here, and then using that as TA in a video. That's not what you want to do. Yes. So look what ended up happening. Not exactly. It's actually not that far off, to be honest, but not even close, really. Once it gets past here, you cannot. There is no exact one pattern that these things are going to follow. If it was that simple, anybody could just take this, paste it onto TradingView, and make billions of dollars. It's not that simple, but there are things you can do to help you understand what's happening. So the very first thing to know when you're looking at an accumulation is you're looking for not only decreased volume, but also a decrease in volatility. Now, this is not the best example of that because this is pretty strong here, but what we see here is a general overall decrease in volume. Yes, it has these ups and downs and whatnot, but you see these volume spikes are lower and lower each time as it goes. And typically you see this in a consolidation anyway. You see decreased in volume. But for the most part, this is a decrease in volatility. This is a condensing formation. So we watch it as it goes. The next thing we're looking for is we're looking for tests to the upper range that don't produce a lot of volume, except for when it's time to leave the formation. So you're seeing this, if we were to actually look at Wyckoff, this to me would probably be the AR right here. And I'm not going to go into what all these mean today. That's going to be in a future episode, so don't worry about it. But basically, the AR is like a reaction to this, the SC down here, which is the selling climax. It's not necessarily the peak, but it generally denotes where the majority of the volume will be whenever there's upper tests. And as you can see, the volume picks up in this range. That to me is a better look at what the AR may be. And now we have multiple tests, and yet you don't really see a whole lot of volume. You see some volume as it came back down, but all these pushes up, you're not really seeing giant increases in volume. Like, look at this. That's kind of a big jump and pretty pitiful volume. Now, coming down, on the other hand, we're seeing spikes in volume. So what is happening here? Basically, the selling interest is not high enough to meet the buying demand. And what that means is we have people selling their stuff, and those orders are getting filled immediately, and by strong hands. And that is all about accumulation. It is exchanging volume, exchanging liquidity from weak hands to strong hands so that they can sell it again later. But typically, when it's time to leave the formation, you will see an increase in volume, and it can overcompensate from the beginning volume. Usually, the highest volume is going to be at the beginning, almost always. But that's not going to happen every time. I don't know if I'm going to spend 5 hours finding you an example, but it won't always be the case. But typically, the biggest volume is at the beginning here of the accumulation pattern. So that's the number 2 thing. We want to see tests to the upper range where you don't see a whole lot of volume spiking. Now, the next topic that is a good sign of an accumulation is what's called the spring phase right here. Now, you don't necessarily have to have a spring phase. The spring phase is designed to scare the last few out so that they can sell, so that your big hands, your strong hands can pick it up. Again, depending on the overall sentiment of Bitcoin, there doesn't have to be a spring. You can skip the spring. It does happen. But when the spring does happen, and that's what this is, we broke the low. We broke the low of the selling climax pretty significantly, but we retested it and then we overtook it. This is a classic spring. The only thing that I don't like about the spring is that it made this second low here. Usually the spring begins the upward movement, the upward trend, right? Higher highs and higher lows. Usually you start to see that in the spring. It doesn't have to be the case. Like as you can see, that was only wicked. It was not broken, which if you follow my market structure video, that's a good sign that price is going to go in a different direction. See how it only wicked it? I don't like that it made a lower low, but at least the candle closed above the wick here. So it's not a break in structure on the daily at least. It might be on the 4 hour, but we're looking at a daily chart right now. And then we do kind of see higher highs, higher lows as we work our way back up here. Typically that you're looking for that confidence. And this is the general area where you're going to be buying. But I don't want to get too much into that. That'll be in a future episode of where to buy and how to know when to buy and whatnot. The last thing we're wanting to know is the overall sentiment of the market. I put this one last on the list, but it's not the least important of the list. If anything, it's probably one of the most important. So on my personal YouTube channel, not linked here, but on my personal YouTube channel, I follow a lot of crypto influencers. Also on Twitter. Excuse me, on X. Thanks, Elon. It just rolls off the tongue. On X, I follow a lot of crypto influencers as well. And the reason why I follow them is not because I, trust their TA. It's because I want to know what the market is feeling right now. And those people are the best example of what the market is feeling. And I look to go the opposite direction. So typically you'll see Bitcoin to the moon, new all-time high, dooba. You see all this clickbaity stuff. The reality is, if that's where everybody thinks the price is going to go, that means they're telling their audience to long. That means they're telling their audience to buy. So what do you think the real traders are going to do? Come on, they're going to make money off of that. you cannot make money in crypto unless other people lose money. And so they're not going to go with the trend if the trend is positive. And typically whenever you see like these springs, and even this is an ugly as hell SOS, by the way. Usually you wouldn't see this low get broken in an SOS. But if I was to go and look at the news from February to March, I bet you everybody was positive. I wasn't watching it at this time. I had some personal stuff going on. But I bet you the news was very positive for the future of Bitcoin. Maybe somebody can look it up for me. It could be wrong, but typically that's what it is. And so what do the big hands do? Okay, well, we need to shake you out so that we can really move price up. So that's typically what that is. And also there's probably some imbalances left behind here that they wanted to fill before continuing up. Typically you wouldn't see an SOS, like I said, that has a lower low on the way out. So look at what everybody online is saying. I mean, some people will get it right. You flip a coin, heads or tails, 50-50. 50% of the time you're going to be right. But most of the crypto influencers just copy each other anyway. So you get what the general sentiment of the market is, and then, Bitcoin confidence, if you could call it. Not dominance, that's different, but confidence. And I think there are some things online that show like Bitcoin confidence or whatnot. But I also like to look myself to see where I think price will go. So a lot of this video I talked about strong hands and weak hands. When you're talking about typical stocks for like Wyckoff theories and whatnot, your strong hands are basically your institutions, your big time stock traders, people on the floor working for big companies, working for massive accounts, to where they kind of have autonomy. Those are your strong hands. And your weak hands are like everyday traders, like, the other 99%, the you and me. Now, when it comes to crypto, it's a little bit different because, the IRS is not regulating crypto. So there's not a lot of your big institutions that are trading crypto. There's the Chicago Mercantile Exchange, of course. But aside from that, there's not a whole lot in the United States. Most of your money is going to be in like gold and Forex and, Apple, stuff like that. Or Nvidia is popular lately. But so it's a little different. I guess you could say it's the crypto whales. But I don't know whether I prescribe to that either. But the reality is somebody has to make money in order for price to move. And for that to happen, somebody else has to lose that money, or else it just doesn't work. So that's kind of what I'm trying to say with strong hands and weak hands as it pertains to Wyckoff. So that, my friends, is Wyckoff accumulation at its basis. Again, there will be more videos on accumulation, also on telling whether it's an accumulation or a redistribution. That can be a very tricky one to figure out. And also what all of these things mean, what's happening during those things, what they mean, and whatnot. Some of it's pretty obvious, resistance lines and support lines, so that's pretty self-explanatory. But I'll go over all the other phrases because they can be confusing and they are important to understanding accumulation. Thank you guys very much for watching. I will see you in episode 3, where we talk about reaccumulation. That's it. Take it easy.